Were you at all surprised at this point? Is demand really starting to respond to the price?
Well, not entirely surprised. I mean, the economic outlook is still solid for now, despite a bit of softening in the PMI indicators in the first quarter. But it's true, like the International Energy Agency said, you can't have this kind of a price increase year over year without having some kind of negative impact on demand. Nonetheless, the outlook by the IEA still remains robust at 1.4 million barrels a day year-on-year growth. And I think in terms of the oil market, we're still looking at a market that's driven by supply issues rather than demand issues. So inasmuch as the IEA has trimmed its forecast, the bigger picture still remains with what happens with Iran, what happens with OPEC, and what are they going to do now that they've achieved their famous 5-year average inventory target.
Harry, what assumptions about oil prices has the IEA used in making those projections? Because we now have analysts who are saying $80, some people even saying it could hit $100. What's that going to do to demand?
Well, in terms of the IEA's projections, the IEA has to remain neutral. So in essence, it typically uses what the future curve is indicating at the moment of the forecast. Now, in terms of the forecast of analysts like myself, we tend to take, obviously, various factors into account, and we need to make a call. Right now, what we're seeing is, at least for BNP Paribas, an extension of supply cuts into 2019 as Saudi Arabia pushes the agenda away from inventories to promoting capex. So presumably, we need a higher oil price, which means maintaining the producer cuts this year and extending them into next year. What's going to happen with Iran now that the U.S. has pulled out of the nuclear agreement? How much actual exports are we going to lose? These are the main considerations that are keeping prices upbeat.
Are we also underestimating the negative impact of what's going on in Venezuela? I mean, the latest headlines with ConocoPhillips seizing assets, being given permission to seize assets, and now other companies, whether or not they've been given permission, are also looking at the situation in the country and wondering how best to protect themselves in that region too. It's curtailing the refining capacity, surely, of Venezuela beyond even initial estimates, surely.
Yeah, I mean, you raise the biggest wild card as far as supply is concerned. What is going to happen with Venezuela? Back when producer accords were formulated, Venezuela's reference level of production was slightly over 2.1 million barrels a day or thereabouts. Currently, Venezuela is producing 1.4 million barrels a day. So we've had a collapse in production in Venezuela. And given, to say the very least, the very challenging conditions financially, economically in the country, will they be able to maintain production even at these levels? And that's a big uncertainty that was also highlighted in the IEA's report this morning.
Yes.
So if we continue to see production drops in Venezuela, the supply picture gets even tighter given everything else that's going on, and that lends itself to the higher price forecast you were mentioning earlier.